Welcome everybody here who is watching us on the webinar platform, and also welcome everyone who is watching us on YouTube right now. And for the viewers on YouTube, if you would like to ask questions to our speakers, so please register to the webinar by the link you see in the stream description, because here on the webinar platform we have the opportunity to ask questions. So let us start. My name is Olena Gryniuk. I will be a host today. And today we speak about invoicing and real-time payments. So how both SMEs and banks can benefit from it. And my guest today, Katalin Kauzli, co-founder and business development director at Charlie India, a provider, and I would say the main ambassador of the e-invoicing ecosystem here in the CE region. And Olivier Denis, senior expert in banking and payments area, member of the European Payment Council, advisor on SEPA payment schemes, future of European payment instruments, instant payments, digital euro and mobile payments. Hello, Katalin and Olivier, and welcome.
Thank you.
Hello.
Good afternoon, everybody.
Okay, so before we go to the topic, let me shortly mention organizational information. So our webinar is scheduled for 45 minutes. We are recording this webinar, so right after we finish, you will receive the link to the video and to the presentation as well. And we start from the presentation, and after that, we will be ready to answer your questions. So please type your questions into the chat, even during the presentation, as soon as you have them, and we will be ready to answer them in the second part of the webinar. So let's go to the topic and at once. Katalin and Olivier, I'm passing over to you. So please, you're welcome.
Yes, thank you, Olena, and hello, everyone. Let me just give you a brief introduction, and I will hand the word then over to Olivier, and later I will come back. We thought that a webinar dedicated for the SME perspective would be very useful. In the past, we've done several webinars and conference presentations regarding the importance of e-invoicing and the importance of e-invoicing and payments from a more theoretical perspective, and we thought that it would be also useful to present the SME perspective, so the SME pain points, and on the other hand, how it looks like in the practice and what it means in terms of time and cost for an SME if banks start providing invoicing or invoice-related services and real-time payments packaged together. And I'm very happy to have Olivier on this presentation because of his very deep expertise in the topic. As I mentioned, I wanted to take the SME perspective. We ourselves, Partner Hub, is also an SME, so we exactly feel these pain points from first hand. What is important for SMEs? Obviously, SMEs are always hungry for cash. They want to get paid as soon as possible. On the other hand, the SME has the employees and the subcontractors and purchased goods, which must be paid and must be paid very easily. In Europe, at least, there is the VAT scheme. So at the end of the month, it is always a crucial issue how much the VAT payment will be. Me, as an SME owner, I also want to know how much money do I have, how much can I spend, what will be my cash flow. Also, if I can get a loan to bridge the cash flow gap. Besides the monetary and cash flow issues, time is also very important. In a small organization, let's take a small organization anywhere from 1 up to 25 or 30 people, the SME owner herself or himself puts substantial time into the financial administration tasks. So it is important for the person to spend as as small time or as less time as possible on these daily tasks that are not very exciting at all. They don't really add value to the SME operations, but it is crucial because you must do it for compliance reasons and also for, you have to make the shop running. Today, the situation is that if we see if we see this today's situation, there are no real-time answers. So if I want to get, very simple, if I want an answer to a very simple question, for example, about my outstanding payables or receivables, if I don't have such a solution that we will talk about later, then what I must do, I must interact with the accountant, write an email, or just call them and ask them about my financial situation. These answers must be collected from several information sources, which also takes time. And if we are talking about paper-based processes, this can be long or this can be time-consuming to do. For example, if you if you are an SME owner, you need to collect the paper invoices. If you are not a super tidy person, it can easily take 1, 2, 3 hours per month just to put together the materials and send it to the accountant. SMEs also face, or most SMEs also face a constant struggle to reach the liquidity gap. Everyone wants to do the business more, get more business, but this also requires always more cash flow, and customers tend to have longer payment deadlines, and we also always must make the always must bridge the liquidity gap, because if an SME has a subcontractor, then these subcontractors are also small companies, so they are in the same situation, so they cannot really finance the SME operations. And this leads to the fact that SMEs are rarely financed, or they don't really get easily financing. And if we look at from a cost perspective, if we need to finance the operations from equity or non-banking sources, which also happens, this becomes expensive. So this is the SME perspective, the SME space where we are coming. But if we introduce services that solve these problems in a single application with digitalized solutions, then it means that, first of all, the SME problem is solved, the SME is happy and happy to pay for a good service, and this means that banks can realize additional revenues and cost savings by providing an integrated end-to-end offer for the SME segment. And this is the point where I hand over the word to Olivier.
Thank you very much, Katalin. So, pleasure to talk to you today about the various impact of instant payment on SME business. But before we talk about instant payment, we should talk about the actual situation, and the situation as it was a few years ago. Back in 2018, before instant payment has been introduced as a new payment method in Europe. The observation in general is that depending on the country, we can say that the market is divided mainly in 4 payment methods: direct debit, credit transfer, card, and still check. As you see, there are still countries in Europe where checks are still much used, in France in particular, in Italy, in Ireland, in Portugal, where checks are still used by retail customers and small business. But in general, we can say that small business used to pay and be paid mainly direct debit, credit transfer, and cards. And depending on the country, the the distribution might be different. What are the with the challenge explained by Katalin about BPay account receivable and pay the suppliers account payable, what are the challenge of those existing payment instruments? With a account-to-account SEPA credit transfer in Europe, the challenge in terms of time is that the execution and the settlement takes typically 1 or 2 days, depending on the ACH. Now there is an harmonization of 1-day settlement in the SEPA zone, but still some ACH take 2 days to credit the value on the account of the beneficiary. And also important, it only works during the working hours. So if you're posting a payment for execution outside the working hours, it's going to be taken for the day after. So as a small business, if you have a challenge in terms of business outside the working hours, how do you deal with it? Second payment instrument and payment method, direct debit. Direct debit is very much used for paying the utilities with the energy suppliers, with the telcos, water suppliers, and so forth, and mainly for recurrent payment with big merchants, so sometimes called the big billers. The challenge of direct debit as payment instrument or payment method is that a mandate has to be signed between the buyer and the seller. In some countries, the mandate workflow and signature has been digitalized, but in most of the country where the electronic signature is not necessarily a legal evidence, the mandate signature is still partially or totally paper-based. So it's still, a market that doesn't really cover the whole market requirement for SME in particular. And the other challenge of direct debit is exception handling. How do you do when there is no money on the bank account of the buyer at the day that the bank has to debit his account to pay the supplier? Or what if the buyer is requesting reimbursement or chargeback for a delivery or service not rendered? Last but not least, credit card, debit and credit. They are mostly used for low value payment, but not really well suited for high value payment, and not much use for supply chain finance and high value payment in business. They are mostly used for expense and low value payment. Now, the good news is the new normality in Europe, as it's called by the European Central Bank, the venue and the adoption of instant credit transfer across Europe. Of course, there is the main initiative of the SEPA, the European Payment Council and the European Central Bank with SEPA Instant, reaching now 26 countries, more than 2,300 banks and payment service provider. Overall, we can say that in the SEPA zone, 70% of all the banks and payment service providers are now connected to SEPA Instant. Yet it doesn't mean that all small business and retail users have access to instant credit transfer, but the infrastructure is there and prepared to make it and deliver the service to retail customers and small business in particular. What is very attractive in instant credit transfer, opposed, for instance, to card payment to be used in business, is that the maximum amount for SEPA Instant credit transfer is set to 100,000 euros. So a lot of B2B business to business and supply chain finance use case can be covered with SEPA Instant, where it is not the case with card payment limited to monthly spent limit. Important is also the reach and the speed. All SEPA Instant transaction can be executed now in less than 5 seconds, and also in terms of value for the business. SEPA Instant scheme operates 24/7, 365. So there are a lot of small business and business in general needing to execute and transact outside the working hours. So the fact that you can pay and be paid, outside the working hours in the evening, at night, or during the weekend, change the shape of a lot of small business, especially when you are in supply and when you expect your goods and service to be delivered before your opening hours. And also very important to recognize is that next to the SEPA initiative at pan-European level, various domestic ACH of non-Euro countries in Europe have already put in place instant credit transfer automated clearinghouse, like for instance in Poland, in the Baltics, in Denmark, in Hungary, and so forth. And yet, indeed, SEPA Instant Credit Transfer has reached a critical mass, but it's not yet really covering the whole market. You see it on the statistics. The total volume of credit transfer in 2021 was around 13 billion transactions, where for SEPA Instant, it was around 1 billion transaction. So we're reaching now end 2021 a little bit more than 10% of the total volume of SEPA credit transfer with instant payment. Now, next to SEPA Instant and the initiative of banks with domestic ACH, there is another phenomenal, in terms of instant payment that is potentially very attractive for business and small business in particulars. Payment service provider, non-bank payment service provider have developed their own domestic scheme for mobile payment, proximity payment, sometimes remote payment. They are mainly focused on peer-to-peer payment, person-to-person payment, but also cover business to consumer and purchase for small business. They are deployed mostly with account-based service transfer hosted in wallet by those payment service provider, have in some countries reached a critical mass. They are sometimes directly connected to the SEPA or instant payment infrastructure, sometimes directly, and sometimes connected through a bank via open banking PSD2 scheme as a third-party service provider. The limitation of this model, it works really fine and has reached a critical mass of users for ecosystem, but they are mainly closed loop models, so-called three corners model, meaning that the buyer and the sellers have to be registered to the same scheme to be able to send and receive instant payments. So the scalability is limited. Most of the time, it's only used domestic. And again, you cannot cover the full business scope, because if your buyer or if your supplier is not connected to that ecosystem, no way you can pay with this scheme. Let's have a look at now at the working model for small and medium-sized business has deployed in Europe. So when there is an e-invoicing service model deployed to automate the workflow between buyers and suppliers, it's mainly through a central service provider where the suppliers and buyers are registered and they exchange in electronic format, structured or printout format, via this service provider in the middle, the invoice. So the supplier is pushing the invoice, structured or unstructured. It's stored by the service provider in the middle. The service provider alert the buyer, and the buyer can download the invoice. Yet this is nice for automating and securing the workflow of exchange of invoice between buyer and supplier, but it doesn't necessarily integrate the payment initiation and the payment processing, which is in most of the case processed through another channel. The business having payment instrument, payment method provided by the bank or the payment service provider to another channel. So the challenge of the market now going for e-invoicing is that e-invoicing workflow and payment process for small and medium-sized business are mostly decoupled and execute through different channels. And this is a major, issue related to efficiency from a operation and from a treasury point of view. First of all, because the channel for payment and the channel for e-invoicing are separate, you can have a loss of data or error in the data between the invoice and the payment initiation data. Secondly, it's difficult to transpose and to execute correctly the payment at the conditions that have been agreed with the invoice, because the execution of the payment conditions is left to the bank channel of the buyer. And last but not least, the reconciliation is challenging because you don't have necessarily, in your bank statement or in your bank channel, the richness of the structured information that you have in the invoice to reconcile the payment credit on the bank account and the status of the e-invoice. So all in all, it means that you need something else, or you need something additional, to improve the efficiency of e-invoicing processing. Is it potentially direct debit? So let's have a look at what is direct debit. So as we say, direct debit is very broadly used in Europe. Depending on the country, the use is large or small. For instance, in Germany, it's very large. It's medium in Benelux. In some Southern European countries, the use of direct debit is very low and sometimes not existing. It's pretty much used by corporate, by big billers for recurrent, but in the SME business, it's not used. So definitely there are many reasons why SME don't use direct debit for business to business and business to consumer payment. The fact that direct debit is complex to set due to the mandate process and the mandate signature. The fact that it's really cumbersome when you have one-off payment, and also mostly because it doesn't really work cross-border. Most of the direct debit work domestic, but not cross-border. So the demand, from the small and medium business enterprise for doing more business cross-border and domestic with buyer and selling counterpart is really to have a bill payment method where bill and payment, instant payment are combined. to give visibility on the payment status and the payment conditions linked to the e-invoice, but also requiring more flexibility in how and when the payment will be executed, and that is critical for supply chain finance and supplier to respect the conditions agreed between the buyers and the seller in the invoice. Thirdly, there is still a need for security and trust, because when you exchange your invoice via emails over the internet, you exposed to fraud and errors. And last but not least, of course, as mentioned by Katalin, combining a seamless instant invoice and instant payment for fast, easy to use by the SME, and seamless reconciliation in treasury. With that said, the banks, and payment service provider have observed that a demand from the SME and corporate business, and they have launched 3 years ago a new scheme which is called Request to Pay, with the objective of standardizing and making interoperable the business dialogue between the buyers and the supplier, or sometimes say the payer and the payee. Mainly when we talk about this new Request to Pay scheme launched by various ACH and scheme infrastructure for SEPA by the European Payment Council and EBA clearing, but some other ACH like Pay.UK with faster payment in the UK, Iberpay, Nets, Hungarian ACH, and P27 in the Nordics have launched in parallel to the EPC and SEPA their own Request to Pay scheme. In a nutshell, what is important and value for the small business, it gives with Request to Pay the ability, when acting as a supplier or as a vendor, to send a standardized Request to Pay via the bank channel to the buyer, combined with the invoice. The instant payment network is then used to present the invoice with the Request to Pay to the payer or to the buyer. And the buyer, after reviewing and consenting to the terms and conditions of the invoice and the payment conditions and payment instrument as expressed in the Request to Pay, will authorize the payment. And next to that, the bank of the payer will then, or the PSP of the payer, will initiate the instant payment that will be made, together with a Request to Pay confirmation available for the seller or the payee to reconcile with the authorized request to pay. So this mechanism provides a unique service in the B2B and in the B2C market for small business to secure and solidify the e-invoicing transport mechanism, consent process, and real-time payment initiation. So it's really changing, a game changer in the instant payment and e-invoicing industry. Let's try to summarize a little bit the kind of advantage that we see, for the small business to use a service combining instant payment with Request to Pay. As we say, the quality of the transaction data, because the Request to Pay agree between the payer and the payee, feed automatically with accurate transaction data the instant payments. So you have perfect quality flow between the payment and the invoice. Secondly, convenience. It's a standardized process that can work cross-border, and it's instant real time. Thirdly, certainty and transparency. The buyers and the sellers agree on the terms and conditions and know with certainty and transparency when the request to pay with the invoice has been authorized and when the payment will be credited on the amount of the seller or the payee. So extremely important for treasury control for the account receivable process of the SME. So all in all, velocity, size of payment, less risk, and improve quality in treasury liquidity and reduce operation cost. We can say that instant payment and request to pay with this answer some of the challenge that have been raised in the daily operation of the SME expressed by Katalin at the beginning of this presentation. Now, I'd like to cover very briefly two use case. First use case of a car spare part retailer in Europe. Small business, but selling spare parts in particular for electric car like Tesla, where the spare parts have average value of several thousand euros. So typically, for selling and distributing spare part of that value, credit card are not suitable. So this retailer selling to various EU countries like Benelux, Austria, Germany, Poland, Italy, has put in place a connection to the local ACH and provide to the customers, garage or car repairs, online button depending on the country where they're ordering the spare parts, and to provide them a payment button with credit transfer in the country where they initiate the payment. Okay, so it requests a lot of efforts because each retailer need that payment button. So it's working, but for sure, there is indeed a lot of challenge related to this. And in the context of what you see with instant SEPA payment and request to pay with instant payment can be the solution for these spare part retailers. Because with SEPA Instant, you cover high value payment, you cover it instantly, you cover it in all EU countries. And with the request to pay, you have the possibility to provide between the buyer and the seller the invoice details and the payment conditions that are suitable for the buyers of those spare parts. So really the benefit is one button, one integration, one single payment method for all EU countries, and a seamless e-invoicing process with real-time payment for straight-through processing and automated reconciliation. Another use case or business case for instant payment is with open banking payment service provider. This is a bit different kind of approach. Here we have an example of a French payment service provider offering an ecosystem and a marketplace for small business acting as merchant or retail users. And this existing ecosystem is quite big. counting several millions of users and about 15,000 merchants. And this PSP has decided to add open banking payment initiation with SEPA Instant as alternative acquiring channel on the ecosystem and marketplace using open banking framework for SEPA Instant payment initiation and also for account information service to the small business and merchants. Actually, they have in the open banking agreement reached with about 300 banks in Europe. And after 2 years live, they have about 5 million registered customers for this service. On the acquiring side, what do they offer? They offer a request to pay plugin as alternative to a card payment plugin, triggering in instant payment, and also
I think
Olivier,
last all year, years.
Yes, then I would take over.
Yes, Katalin, please take over, and then let's go to the question then. Yeah.
So I can see Olivier's slides, and I will finish. So in this business case, you can see that the card fee is about 0.35% commissions, as opposed to the SEPA credit transfer price, which is a fixed fee, and it is 0.2 euros for each transaction. And if we multiply these numbers and take the average ticket size of 700 euros, then there is an 8 million euro, which can be distributed between the sellers, the buyers, and the PSP. And just one more note on this side, if the PSP happens to be the bank, then it is, of course, the bank's additional benefit regarding this use case, or it could be the bank's additional benefit as well. Again, a summary, I wouldn't take too much time on it because we will get into the numbers again. Definitely request to pay and real-time payments is much better for high-value payments, and it represents a significant value compared to card costs. And the value of request to pay has already been mentioned. It gives additional flexibility. It gives the automation of reconciliation. It gives the opportunity to treat several documents together, like the invoice and the payment documents, and invoice and payment data together. It can also be a platform for better communication about the payment. Why is it happen? How it cannot happen? If it cannot happen at this moment, and when it can happen. So these are the most important added value of instant payments and request to pay, especially when integrated or coupled with e-invoicing. I prepared a very simple use case and business case about a very small business owner, and very small business. I put together how much time is spent by the small business owner and how much time is spent by the accountant when we are talking about not many invoices, like 45 invoices, of which is 30 supplier invoices and 10 is customer invoices. And I put together the costs for all these processes. You can see that the digital solution can represent 70 or even 85% savings when we are putting every process or these processes into the digital space. And when we are talking about when we transfer this into costs, then the cost also represents a 70% savings. If we are dealing with paper, then the costs from the business owner side represent 1,300 euros approximately if we take a 120 euro day or hourly rate for a small business owner, and this can be increased to 360 euros if we are taking the digital processes altogether for the business owner and the accountant. These are really simple calculations, but it is it becomes very visible when we actually do these calculations and present these calculations. We also made a very simple calculation on the comparison of card payment costs and instant payment costs. These cost comparisons are based in publicly available terms and conditions of MasterCard, and I took OTP Bank small business packages as an example. So if we compare the minimum and maximum fees for card payments and credit transfer costs, then you can see that the difference is striking. The maximum can be, for example, almost 3% for card payments, and it is the maximum for the instant payment cost, and request to pay is approximately 0.5%. This translated into various transaction sizes. You can see, as Olivier also mentioned, that for small payments, the credit transfer and the card payment costs are comparable. If we are increasing the transaction size, then the card payment will be substantially more expensive compared to the instant payment and request to pay service. I added the two factors together, so the explicit time factor and the explicit money factor in terms of the payment costs. And you can see that comparing or adding these together, the rates for the savings are similar, so it approximately can be 1/3 or even less than third of the costs when we are talking about paper versus the digital invoice processing and card payments substituted by credit payments. I just added also together the whole assumptions, and you can see that on an annual basis, an SME company can easily save more than 10,000 euros just adding together these costs. 10,000 euros might not be, very significant, but still it matters. And if it matters for a company with let's say 1 million euro B2B transaction volume, then you can imagine if we increase the numbers, then it can be a sizable saving on the SME side. So I thought it would be important to visualize these numbers, because we always talk about the advantages, but if we never visualize it and never make the calculations, then it is very easy to skip it over. When you see these numbers and how striking the difference is, then I think it makes sense to start thinking about really serving these SME segment with this integrated offer. Mm-hmm. I also put together a calculation on how the working capital financing is affected in the paper-based and the digital case. If we take invoice processing as a As an example, if we take the paper-based processing, it can easily take more than 3 months to get the money for the SME customer versus 17 days if we go on the digital route. I assumed like normal or market standards for the processes of each step. And you can see that just by decreasing the process times, this can mean a significant saving for the SME company. We can, if we calculate with the cost of equity for the funding need, working capital funding need, then you can see that the cost of working capital is less than a fourth if we take the shorter times caused by the digital invoice management processes and digital payments. If we couple this together, then the cost of receivables from financing go from 20,000 euros versus in the digital way it is less than 4,000 euros. And if we assume that the bank could finance this SME, if it had this digital solution, which also provides an opportunity to finance the SME customers based on invoices and invoice data, then the bank misses 2,000 euros interest income just on a single SME if it doesn't finance it. So all in all, this is a huge market to address. And why we are talking about this now? Because as you can see on the map, e-invoicing is coming everywhere in Europe this year, next year, or the year after, or it's already been introduced. So it's becoming a hot topic. The invoice data will be available, and banks will need to decide how they enter this space, what are the services that they can build on the availability of invoice data, and the services that they have already implemented with respect to instant payments and real-time payments. Our proposition is for banks that e-invoicing should be coupled with the opportunities of real-time payments. Invoicing service can be integrated into the online and mobile banking channels of banks coupled with real-time payments. As mentioned, the invoicing is already or becoming mandatory. SMEs, as you could see in the very beginning of the presentation, need easy-to-use products for their day-to-day financial and administration processes and help they need help with the financial management. They also need real-time information, and automated payment reconciliation is also important from an accounting perspective, but also from a real-time information perspective. Which invoice is paid, which invoice still needs to be paid. Use case has not only benefits for the SME customers, but for the banks. The invoice data enables process optimization and additional insights for the bank. It also helps banks to make their processes digitalized. From invoice data, the payment initiation or a request to pay can be generated, and the digital financing can be also enabled by structured invoice data. Obviously, the invoice data, if it's not single invoice data, but a mass of invoice data, will offer the benefits of building better risk models and build cash flow projections for timely and tailor-made offering for SME customers. For today, this was the presentation, and we are very happy to hear your questions. Thank you very much. Thank you, Olivier.
Thank you. Thank you all.
Thank you very much, Katalin and Olivier. And Olivier, we're glad to have you back.
Yeah.
Yeah. So my question, first of all, the first question will be to you, Olivier, because, you know, for me, I mean, the advantages of the instant or real-time payments are obvious, and you presented them. I mean, both for the business customers, especially for SMEs, for which, you know, the problem of liquidity or covering financial gap is crucial one. How do you see, what is the main challenge now in Europe? So why we still do not have this offer by the main part of the banks, at least here in the CE region? What is the problem and what is the challenge, and when will we have it?
No, it's a very good question indeed, because I show you a lot of promising figures, as you see, roughly 70% of all the banks involved in SEPA credit transfer are now supporting SEPA instance. So they have somehow the capabilities of sending and receiving instant payment instruction in the back office. Yet, indeed, you're right, Olena, it's not yet a reality for all banks. So still 30% of the banks in Europe are not connected to those SEPA instant infrastructure. Some of them have not really found a kind of business case for it. Why that? Because instant payment is changing dramatically the way the payment are processed by the bank in the back office, in the accounting system, in the channels. So banks have processed for decades, batch payment end of the day. The accounting system is based on end of day account settlement and batch processing. And so, making the investment in the back office, in the core banking system, and then, developing a new strategy to make the service end to end to the consumer is still a stretch for some of the banks, because it's a huge investment. It has impact on core banking, and it has impact on channel. The good news is indeed the largest banks in Europe, the so-called tier one banks, have made that investment now, and we are processing already 1 billion of those transactions. And the question is indeed for the bank, where should they invest first? In terms of, and I think with this webinar we show that. It makes the value for the whole stakeholders of the industry and the corporates and SME to make that investment reality. In instant payment for corporate and SME, because this is where the high value payment are accepted, and where instant payment can bring the best value. And for that to be convinced, we just have to look at the PSP, so the non-bank market. They are implementing faster than the bank, because they are focused in terms of business, not on the two decades legacy service, but they focus exclusively on the marketplace with some niche customers and deliver immediately instant payments. So the banks are really have a challenge, to offer all of them, the instant payment to the retail customers. And maybe where they should focus first is on corporates and small business, where it brings most value. Invoicing, we explained today, is probably the case.
So what is your prediction when actually the 70% of the banks will have it?
Well, it's. I would say it's going to take, if we make the parallel with the development of SEPA, it took 4 or 5 years to really reach the whole market. SEPA instant and instant payment are not yet a mandate of the National Bank and the European Central Bank. The banks will only invest if they have a business case. But e-invoicing might be the one. So my prediction with the mandate calendars on corporates is that the banks have the opportunity to make it in the 2-3 years with the SME and SME customers.
Okay. And now maybe let's talk about the integration of instant payments, let's say, and invoicing. Katalin, we are discussing, and you started this project of the integration, right, of request to pay with invoicing ecosystem last year. So what is the advantages also are very obvious, again, both for the SME customers and also for the banks. What are the main challenges that you see here on the market, and how to overcome them? How to make these integrations faster?
First of all, I think there is a problem on the bank side that they also need to understand the business cases and the use cases, how it can be used, and the availability of invoice data. That's the other issue, and the integrations between the systems. So these are the most important issues. We are with our humble resources, we are working on the understanding of the business cases, but it's fortunately not only us, other market players are also working on this. So it is so first is that banks understand how they can turn the regulatory pressure into a revenue generation opportunity. The other thing is that if e-invoicing is introduced in the country, it's much easier. And the third thing is that banks must onboard their customers. And when they are onboarding their corporate customers, there is always an integration need, which is a barrier to entry for most of the corporates. And that's what we are addressing with our new developments. When if you have the invoice data, the integration needs are decreased by 80-85%, because then the corporate ERP doesn't need to create a new interface, just use the already available data. We help this data structure be converted into the request to pay data structure so that it can be routed to the payment system. That is the corporate side. For the SME segment, as we presented, banks, if they decide to start a new generation of SME banking services for the SME segment, then this integration problem doesn't exist, because the bank has everything inside its domain. So these are the main challenges which should be addressed by the market players, both vendors, corporates, SMEs, and the vendors as well.
And which resources from the bank side are needed to implement such projects? That maybe both for SMEs and corporates, like for all the business segment.
The resources from the bank side, I think it's start with the strategic planning. So how the bank wants to position itself on this market. And I think that is the most difficult point in this discussion, because after the solution, I would say, is easier. When we are talking about launching a new service for SMEs, it can be a team of, 7 to 8 up to 20 people, depending on the project scope. And obviously, an MVP can be brought to market within 3 to 6 months, depending again on the project scope of the bank. As for the corporates, we also have solutions that are enabling the bank to serve their corporate customers. We are offering a very easy to use API layer, which can be supported by user interfaces on the corporate side. So I would say it is even easier to launch this service. We are working and we are welcoming any POC bank customers on this side, just to see how it works. Obviously, we have the concept, but we also need the practical experience as well.
If I may add, Katalin, I think also what we see more and more is the cooperation of the payments, open banking payment service provider with the bank. Because, a few years ago, there was a debate, about the competition between open banking PSP and banks. And now it's pretty clear that there is a cooperation field and acceleration to the market, because typically open banking payment service provider and third-party service provider are more agile in providing new innovative service to SME than the bank. Okay, the bank have the back office ready for instant payment processing, so they can process the instant payment processing and the invoice flow of the customers. They have the capacities, they have the connection to all infrastructure. And on the other hand, the PSP can make the interface or the integration of the SME or corporate customers, and that could be a kind of accelerator. So as open banking is accelerating and new added values are developed, we will see more instant payment and more invoicing service offered by third parties.
Okay. Yes, I do hope that open banking and Katalin, as you mentioned and showed this map, that e-invoicing regulations are coming into force in European countries in the nearest 2-3 years. So I do hope that this will accelerate the e-invoicing and request to pay integration in the SME market. Okay, so let us finish our webinar already. So thank you very much, Olivier, Katalin, for your contribution. Thank you to our attendees. And please also join us for our next webinars. Subscribe our YouTube channel and LinkedIn page to stay tuned on the next topics. So thank you very much and see you next time. Goodbye.
Thank you. Goodbye, everybody.
Goodbye.